Welcome back, Amelia.
Hi, can you hear me?
Yeah, how are you?
Super, I'm well. How are you guys?
You're out of this world.
Thanks.
Yeah, you like that, huh?
I do. It's exciting. And I
All
did
right.
run the marathon in Houston, so this past
Amelia,
Wow.
have you ever run the original marathon in Greece?
No, I would love to though. I actually know people who have, and that would be amazing. So
It's every November, so make plans. Come next November.
Yeah.
yeah,
We'll be
I
happy to
should.
have you in Athens.
Yeah, and
Yeah,
And you
I
can
would
Steve.
also.
love to. What's the weather? Is it very hot in November in Athens or
No.
Nice.
It's actually usually it's. I would say around November can be anywhere between 10 degrees Celsius and 20 degrees Celsius. So anywhere.
okay.
And
So
Amelia, Steve does a
so the
marathon
temperature
too.
is
Oh, really?
the temp.
Yeah, in
Oh
his Mercedes.
no. I actually used to run quite a lot on a
Huh.
weekly
Okay.
basis.
Well, used to.
And yeah, until my back gave up on me.
Yeah.
Oh, man.
Now you run
Yeah.
it in your Mercedes.
Yeah.
Admit it.
So,
All right.
so
You have to get a
unfortunately,
standing desk. It's like sitting is the new smoking.
Oh,
Right? You
oh
have to do
yeah.
that.
yeah.
Yeah.
So unfortunately, I've now restricted myself in taking almost every single night like a very long walk outside. You know, when things calm
That's
down.
nice.
So I walk like 4 or 5 kilometers per night.
That's great.
That doesn't hurt my back, but unfortunately the vibration from
Pounding. Yeah.
running, yeah, unfortunately,
Yeah.
yeah, I can't handle it anymore for more than, I mean, if I do it a couple of times in a week, then I'm going to start feeling really lousy. I'm going to wake up and be like a piece of wood.
Yeah, I understand. Maybe incorporate some yoga there. Come on, this is like a fitness show now, right?
Yeah, okay. So, switch on your camera and show us some yoga because I have, no relevance with this game. I mean,
We're
I have no
covering a
idea.
lot of ground this morning. We got Prince
Yeah,
songs, we got
yeah,
fitness.
indeed.
There's a lot
Don't
going on
forget
here.
the extraterrestrial. So,
That's right.
Oh, yes, do.
Amelia, the big question is, and you share your screen by going to that green box
Oh no.
that says
There's a share button,
share.
yes, in the
Yeah.
panel.
Uh-oh. I
I'm
don't
going to
see
try and
it.
get Steve to calm down a little bit. He's very excited about you being here today. All right, so it's a little green box, drop-down menu when you float your cursor over it.
I was share.
Yeah,
Yeah.
sure.
And it's going to ask you which screen or application you want to share, and then you click again and you're good to go.
Okay.
There
Yeah,
you
there you
go.
are.
All right, let me just get this back up. And then I have two things. I'm going to switch between a PowerPoint, but then don't worry, I'll show you live charts, but I just want to.
Okay. What good is anything, Amelia, until it's shared with another?
I didn't want to be too repetitive, but here's where you can find me. That's my website on top.
Okay, yeah.
Right at the start, you can sign up for free content in the pop-up box. And then I have a global macro event risk webinar. It's monthly. It was just last night. You can reach out to me if you want to see that one as an example. But it's marketcompassllc.com and go to the webinar tab. And there's a video explaining what it is. And you can subscribe at the bottom.
Okay, cool.
And this is where you can find me everywhere else on social media.
Okay.
I wanted to start can I start with just what's going on?
Yeah, sure. Yeah, I mean, take it away.
This is just the S&P 500 versus the VIX index. So the VIX is yellow and the S&P is the red and green line. Yep. And you see that, look at that move obviously up in the S&P, new high after new high. And you can see that V, where the VIX is lowering and the S&P is really rising, starting October 11th. And that was when U.S. President Trump announced the phase 1 China trade deal had been reached, and it wasn't signed until January 15th. And you can kind of see that vertical line all the way on the right. That's the day, January 15th, when it was signed. And you see even another up leg there in the S&P 500. So that's really set the tone. That October 11th date just really set the tone of the risk on, the risk seeking in markets. And I just put that horizontal purple line at 18, and that's the line in the VIX where once it's above 18, things are considered, kind of risk off. It's VIX spiking. So I just like to refer to this chart.
Do you make anything out of it with the parabolic move we had in indexes that the VIX didn't print 11 or 10?
Yeah, I think that just the VIX has been super, super low. And even, I'll get to this in a minute, even through the Iran strikes, it was pretty low. So, you know, the market, that's showing to me that the market investors have some complacency. So, you know, if this is going to go one way or another, you're going to have a risk off kind of shock or a risk off movement.
My point was that we didn't make new lows on VIX
Oh,
with
okay.
the parabolic move in S&Ps.
It's just so low already. I think part of that,
Okay.
you know, that you bring up, part of the reason we didn't, I think, is because like Brexit was still out there, and you know, we didn't really have a date for the signing until like right a week before it happened. So people were like, it's going to get signed, the trade deal. And then we also have, you know, the U.S. kind of President Trump impeachment simmering in the background. So there are some definite risks out there.
Would you be buying it for insurance at the minimum?
Yeah, I would.
Okay.
I think the market's too complacent. As a hedge, I would actually buy it. I think, you know, I think was it Paul Tudor Jones? I forget who said it this past week. I know he compared now till 1999, but he was saying, you know, I like to ride the market when it's running. And me too, you know, me too. I think, you know, this ride up in stocks, it's hard to fight a severe, you know, it's hard to fight a big risk on move, and it's hard to fight a big risk off move. So if this is running, you know, let it run. You can kind of, if you're nervous about it, which, you know, you should be, but I'm not saying add to the position, but your existing equities positions can let them run, and, you know, you can hedge with a long VIX position, try to hedge that.
Okay.
And you can see here, this is just a dollar index. You can see that we're just trading in a lower range. It's just shifted lower. And that makes a lot of sense because we've had this big risk on move. And so the dollar being a safe haven currency can kind of, you know, take a break. It's not weak, but it's shifted into a lower kind of trading range. I also
your big events were parity or lower in euro and sharply lower cable. And you talked about that if you're not there for those moves and you're at a bank desk, you're fired. So let me ask you, I talked about it in Twitter. Has your bearishness decreased on the currencies on euro and cable? Or do you still look for those types of watershed marks to be achieved?
It's the watershed marks I don't think are going to be achieved this year because it seems like we have, for the most part for Brexit, we've avoided temporarily at least a no deal exit from the European Union, but I'm always a seller of cable basically. So anytime I don't like cable. Anytime it rallies, I want to sell cable because there's just so much risk coming up. I'll just show you this one chart here, and then we'll go to cable, just because I have it up. I just wanted to, we're just on the equity market rally here. This is the red and green. This is Tesla, and that's a parabolic move. And against Tesla, this purple line is dollar yen. And so it's kind of interesting how this parabolic move was ramping up here in Tesla. And this is dollar yen. Dollar's getting stronger for the most part against the yen because it's risk seeking. So that makes sense. And Tesla's like a proxy for that risk seeking in the market. And then these two vertical lines here in this oval, that's the Iranian strike. So that's the January 5th US drone kills the military commander in Iran. And then this is a retaliatory strike on January 8th when Iran strikes an Iraqi military base with U.S. troops on it, okay? And so you see equities are pretty much held in over that time. This is Tesla, but you know, dollar yen strengthened. So this is that risk off move in currencies. You see the departure here. Yen basically strengthens and then recovers pretty quickly. This was only about a week, 5-day period here, this oval. And we see it coming back up. So I just think it's interesting that, maybe investors and traders, when they look at like an oil price shock like this, over that time, we ramped up in oil price and then it came off quickly after January 8th again. It's interesting that some traders clearly turned when oil spiked and it was risk off and yen strengthened. They turned their attention to, you know, like an alternative energy car company. And I think this is kind of one of the first times we've really seen that, and just something to keep in mind going forward. If there's ever
Huge short squeeze. I mean, there were huge short positions in Tesla. I think they're in the graveyard now.
Yeah. Yeah, it's just been really.
And the yen, I don't know. I think this action that we had over 109.70 that looked like a breakout, we're underneath it now, Amelia. I think there's a chance with what's happening with yields that U.S. dollar yen is heading lower here.
Yeah, I think there's too much risk out there. I mean, you guys, this is dollar yen. I mean, you guys are talking about there's a coronavirus. There's, you just don't know where the external shocks exactly are going to come from. We have very bad news. We've had very bad news, especially the past 2 days on Boeing. Boeing being the largest.
Oh, yeah. It broke down.
That bad news for Boeing is not over yet. United Airlines came out yesterday and said, you know, we're not going to fly. They basically said we're not going to fly 737 MAXs all quote unquote summer, where the FAA was expected to approve them by June, the end of June. So they're just day after day of bad Boeing news. And what happens is bad Boeing news, Dow futures are lower, Dow opens lower, dollar yen falls. Like this has been a pattern since the whole entire Boeing crisis commenced. So yeah, here you see dollar yen, and the blue lines, the blue horizontal lines are the support levels. So you got to be looking at, you know, just around 109, the figure 108.50, and then 108. So
nice look.
Yeah, anytime we get up to like that 110.50, and we haven't been up there, but for a while, but we were up there last in May. But you know, above 110, the figure, I'm a seller of dollar yen. Why? Because there's too much risk out there. There's the impeachment in the Senate going on for President Trump. We don't know who the Democratic candidate will be yet, to his challenger for the election. Brexit's like sort of resolved, but not really. And Boeing is still having immense difficulty, which will impact headlines.
Okay. What the dates that you have on the vertical dash lines, are they cycles?
No, those are just, I don't know, those are just auto added in. So.
Oh, okay.
But let me show you sterling, because we have Brexit coming up. We got to look at that, right?
Yeah.
You mentioned it. So here's sterling. You know, we have three interesting dates coming. So these will be exciting times in the market. So January 29th is Boeing's earnings report, pre-market open. So that's going to be, I got out of my Boeing position because I was like, I don't really want to deal with this that day. So, you know, you want to watch dollar yen intraday that day, clearly on January 29th when that earnings report. And you have time because, as I just mentioned, earnings comes before market open. You're going to look at the Dow Jones futures. You're going to look at how Dow Jones opens. You're going to be looking at dollar yen that day. The very next day, the 30th, pre-market open again, 7 a.m. is the Bank of England meeting. And this will be one of Mark's last meetings. So I'm sure.
What country is he going to next?
I think he's staying. I think he's staying in the UK. Andrew Bailey takes over March 16th at the Bank of England, and he is he's British. He's from the UK, and he's at the FCA, the regulator, right now. But he spent 30 years at the Bank of England before going to the regulator, so he's very well known, obviously.
Okay. Maybe Carney will come here.
I don't know.
You know, President Trump doesn't like Jerome. Go ahead.
I know.
Go ahead.
Bring him in. We'll
He's
see.
mean to him, Amelia.
He is mean to him. He is.
Yeah.
I think Jerome's been doing President Trump some favors, but President Trump, I mean, you know, just.
You can never do enough.
Yeah, you can never do enough. That's what I'm trying to say.
All right. What have you done for me lately?
Yeah. Exactly.
Anyway, so how do you approach this going into Brexit?
Well, the funny thing is that January 30th, pre-market open, is the Bank of England announcement. And the next day, January 31st, is Brexit. So you got the 29th, the 30th, and the 31st. You have this like 3-day period. That's going to be very exciting. What a way to end January. It's going to go out with a bang. It's very exciting. So January 30th, the Bank of England could cut rates. This is one of Mark Carney's last meetings. Maybe he wants to leave the UK in shape the way he wants it, saying, look, I did everything I could. They had weak holiday spending in the United Kingdom, and the market is just a little under 70% price for a 25 basis rate cut on January 30th. So let's see. It's going to be a surprise basically either way because it's not fully priced. It's going to move the currency. So we could have this thing where the Bank of England cuts rates on the 30th, and that would weigh a bit on the pound depending on how dovish the statement is. And so we would look back down to that 130, the figure there, that horizontal line, and possibly even, we could push it to 129, the figure. The following day is Brexit, the 31st. So not a lot is going to change in UK citizens' lives on that day because we avoided the hard exit. But, it's going to be a weird day because the market's waited for it kind of for like about 3 years. I'm not entirely sure what's going to happen that day, but I'm sure you want to watch the pound. We could see a bit of a relief rally. You could see a bit of a traders are like, finally this has gotten done. And I don't think it'll be much of a rally. I don't think it's a rally you want to ride, but you may want to be cautious if there's a relief rally back up to say where we are now, or 132 the figure, maybe even 133. And that would be a definite sell area because a day after Brexit or 2 days after Brexit, you're going to start to see the negative headlines, which you've already started to see about fishing rights between the UK and the EU and all of the trade issues that are going on. And so that's going to continue until December 31st, 2020. And
what do you do with major red events? Central bank
Yeah.
announcements, Brexit announcements. You use the word watch, and I would rather react to the reaction than be positioned into it.
Yeah.
Is it okay to stand aside and do nothing?
Yeah, it is. It's a definite Bermuda Triangle here with the, I don't know, like a Bermuda 2-point, say. We have the Bank of England and the very next day Brexit, and that's going to be a tough one. If Bank of England doesn't cut, you could see a little bit of rally in the pound, like, okay, they didn't cut, pound supported. Then the next day you could see a little bit of a mini rally further, like, ooh, Brexit has actually got done. And then that would be, I wouldn't play that rally. If that occurs, I would not touch it. I would just wait until it's over, and then I would short the pound. And I would short pound at the top of the range. You see the range in the box there, like that's 133.50. If sterling breaks the range top side, I'm not going to chase it. I'm going to wait to short it. It's going to turn. So if you think it's getting away from you, or anyone thinks that, there's going to be so many negative headlines in the next couple weeks after the Brexit that I would just not worry about it. It's not going to get away. You're going to be able to short it, I think.
No FOMO.
Yeah, exactly.
Okay.
You want to look at Aussie?
Sure. Yeah, we were talking about that today.
Yeah. Aussie has had a bad start to the year, obviously, with all the, the bushfires were so devastating. And bushfire season continues to go until March. So it's not over yet. And temperatures are actually very hot today in Australia. They're very warm, and they're expected to be warm for the next week. So people are actually pretty worried there still.
Is it more weather or China?
It's more
fires. It is a fire.
Yeah, it's more weather, but obviously, Australia is impacted by anything that happens in China, and so it's just kind of that certainly isn't helping the coronavirus outbreak. But we have a lot of productivity loss from the wildfires, housing buildings destroyed, tourism's been impacted, agriculture, and this had followed on. The wildfires had followed on from a drought in Australia, so it's just been super tough. They're going to take an impact onto the Q1 GDP. We did have good employment last night. It's just a matter of consumer sentiment, if that kind of holds up or doesn't. And so the RBA, the Reserve Bank of Australia, may want to get out in front of this slowdown. We haven't heard from them in a while, since December, but their next meeting is February 4th. And so that's going to be a pretty interesting day in the market for Aussie because, they could cut rates to kind of get out in front of this slowdown. In the back end, there will be rebuilding, obviously, and that will help offset the slowdown. So, you had the destruction, you're going to have rebuilding, but those kind of are one at a time. So you're going to obviously see the slowdown first in the Q1 GDP numbers. And it just depends on if there's any more wildfires between now and February 4th, what consumer sentiment does. And so you're just looking at, down to like, say, 68, the figure there is a big level, is a big support in Aussie. If the RBA does cut rates, we'll definitely see Aussie lower. And it's been interesting because at the start, we showed those charts of the big, obviously, run up in S&P 500, and Aussie being a high beta currency, it really hasn't enjoyed, we did reach the high of 70 around Christmas time there, shortly after, before New Year's, 70.15. But considering how much the S&P 500 has run up in the US, Aussie really hasn't caught that momentum. And so
such a bid, you're right.
Yeah, domestic factors. And so I like it lower. I think with what's going on there, it can't really rally too much.
Amelia, I think the last time we talked, I'm not sure where Euro was trading, but we had that rally from the high 108 handle to a little over 112, and here we are at 10.5. It looks kind of negative to me that this may have just been some type of little ABC up to 112. And is there anything that's telling you what kind of levels to the downside will be important in Euro?
It's really been rangy. It hasn't really done much. To their credit,
right.
Draghi, before he left, he handed the reins over to Christine Lagarde. He implemented a new quantitative easing. He cut rates and he implemented quantitative easing. So that's going to help. It weighs on the currency, but it's going to help the economy going forward, where prior to that, when I had that very negative call a while ago, the ECB was on hold and wasn't doing anything. I always think kind of the ECB has reacted a bit late to things.
Do you think it'll be different with Lagarde?
I'm not sure, because she's doing a review now of the inflation target. Mm-hmm. And so that's coming under a little bit of scrutiny. So we'll see what comes of that. I'm surprised she's taking that on so early in her tenure, and people are a little wary that she's aggressive. Yeah, it's a little aggressive. So people are like, yeah, what is she doing so soon?
Yeah. Okay.
I just think we're stuck.
Not like Janet Yellen.
110 figure is a big level, obviously. The bottom of that box, 110 the figure is a big level.
Okay.
Anytime we get sub 110, I think traders try to just push it lower.
Okay, looks pretty heavy to me. So any outside markets? Perhaps precious metals have had a big run, or anything on bonds? Do you have a view on yields that could affect currency movements?
I'm going to show you. I'm going to do another currency, though. I'm going to show you this. I'm going to show you Sweden. Weird. Something's going on in Sweden. Why can't I picture it?
EURUSD?
Yeah. So, the Riksbank has done a weird thing, and they pre-told us they were going to do a weird thing in December. They said they were going to hike their policy rate 25 basis points, which to every analyst made no sense. They literally came out before they did it and said they were going to do it in December. They told us. And this didn't make any sense. Sweden's rates were negative. They hiked them to 0. And the Riksbank was saying their economy is in a slowdown. So it didn't make sense. Their inflation is sub-target. So this made no sense that they were going to hike rates. And they said the reason they did it was just they were uncomfortable having negative rates and they wanted to get back. And so here you see Euro stocky and you see the high, and it got massively stronger against the Euro. This is October 18th. So that's like a few days after, that's like a week after the US-China trade phase 1 deal was signed, and US equities are rallying massively here. So stocky rallies massively against the Euro too, because it's a very high beta currency. Plus the central bank was going to hike in December. Now we've kind of consolidated, and we've turned back up. Stocky's getting a little weaker post the rate hike.
So you think this is a central bank aberrational behavior, or could it be a precursor? You don't think it's a precursor? To danger.
It's kind of like they didn't know what to do, and they were really uncomfortable with negative rates, so they just decided to hike. But there's no economic reason to hike, And most analysts in Sweden, like based at the Nordic banks or Norway, based in the Scandinavian banks, who are, you know, familiar and live in the region, are saying like Sweden's going to go into recession this year, and so they're going to have to cut rates again. And so this was a mistake. And so, while this isn't a right now trade or immediate, this is you definitely want to watch EURUSD to run back higher. You know, we have a 1060 target, possibly even all the way back up to say 1080 over the next few months, as you know the data weakens in Sweden, and hopefully the currency will reflect that against the euro.
Okay. So now would be a good time to go back over your contact information, unless there's something else you want to share with us today, Amelia.
No, so yeah, here it is. I put it up first because I always forget. But you can find me on Twitter at Amelia Bordeaux. I do a lot of video stories on Instagram stories, so it's just at Market Compass, and you can see intraday updates via video there. And I have Market Compass YouTube, which shows kind of my media interviews and me running marathons and stuff like that. But my Global Macro Event Risk webinar, that's a separate tab on my website, and it's a monthly webinar. We just held it last night, and it goes through very specifically event risk and tradable events, or how to hedge your portfolio over the next 3 weeks. It's held every 3 weeks, and then I email updates in between when something is changing or newsworthy. You know, it allows you to know which days, even if you're a technical trader and not macro based, it allows you to know which days in the market are going to be busier than others. Like I explained, it's January 29th, 30th, 31st. They're going to have a lot of volatility. So, you know, we look at equities in the US, we look at commodities, and we look at foreign exchange. So you can watch a video there and learn about it, and you can also subscribe there. And if you just go to my main homepage, marketcompassllc.com, you can just sign up for free for my free content also.
Well, thank you, Amelia. Amelia is one of the best central bank watchers I know, that ties it all together, puts the jigsaw puzzle together. So I hope you have a great 2020, Amelia.
Thank you. You too.
That pips rain down on you. Like,
you too.
like what it's like when I sing Purple Rain. So anyway, thank you so much, Amelia. Good hunting, and let's get back together in the spring.
Yes. Thanks, everyone. Take care.
Okay. Oh, one question. I want to wrap it with this from Alexandros Mertson. I'm going to embarrass him. Is Amelia married?
I am not married, but I have I am in a long-term relationship.
Okay. So forget it, man.
This
is not FXmatch.com, Alexandros. You're banned from Facebook. Anyway.
FXmatch.com.
All right.
Well, maybe you can start a new company like TraderMatch.com.
I have enough.
Business idea for you.
Enough on my plate right now, Amelia. So thank you so much for hanging out and sharing your views. Good luck at the end of the month.
Okay, take care. Bye.
All right, everyone. That's a wrap. We'll see everyone for Turnaround Friday. We'll wrap it up. TGIF. Don't just count your pips, count your blessings, everyone. And we'll be back here tomorrow to wrap the week up with you. Adios. Thanks again, Amelia.
Take care.